Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Cyril O, at Oat1926, Yellow Cake Advocate, Tony P, Peter S, and Jim P. So we're joined today with Brandon Munro, CEO of Bannerman Resources, a Namibian-focused uranium developer advancing the Etango project on the Atlantic coast of Namibia. The company is listed on the Australian Securities Exchange under the symbol BMN, and also on the US OTC markets under the symbol BNNLF. The company also has a listing on the Namibian Stock Exchange. Brandon, welcome to the show.
Yeah, thanks very much, Andrew. Great to be talking.
So Brandon, let's go back. Tell us how you came into the natural resource business. What caught your attention about this business? And then how did you become focused on uranium?
Well, my journey started with an economics degree in Western Australia, and I progressed through that and also graduated from law school over here, and initially went into the corporate legal environment. I was very attracted by mergers and acquisitions and some of the large transactions that go on in a place like Perth. And you know, Perth is quite an interesting place. It's not a particularly big city at all, but it is one of the probably half a dozen most important natural resources centres in the world, being the gateway into both Australia, but in particular Western Australia with its vast mineral resources. And I think when you're working in a big commercial corporate law firm, particularly at the pointy end of mergers and acquisitions, it's only natural in this environment that most of your clients are resources companies. And then I was particularly fortunate to be cutting my teeth in that environment in the midst of the last uranium boom. So a number of the very quite famous, you could say, takeover battles we participated in, probably the best result out of those was Summit, where the firm that I was working for was retained by Summit for its defence, and we ended up with an outstanding result with a final takeover price of about 1.2 billion. And a number of other uranium companies offering general corporate advice along the way. And there was a lot of acquisitions of properties, acquisitions of companies, mergers, failed takeovers and sovereign buyouts and so on. So what happened after that is I emerged from law and joined a client, which was a conglomerate listed on the ASX that had a number of different assets. And it was a good opportunity for me as a young professional to get out there and manage a number of large-scale transactions. So even before the takeovers days in the uranium sector, I managed the float of Oceana Gold because the company I worked for owned the Macraes gold mine in New Zealand. I did quite a lot of work in renewables infrastructure because the company I worked for was bidding on a very large waste management and renewable energy project in the UK. It was that type of stuff that was nice and meaty, and for a young professional, I could have one foot in the heavily regulated side of what we were doing with my legal background, but then another foot venturing further and further into the more commercial aspects. And I think it just morphed from that, that exposure to the cut and thrust of deal making in the resources sector, plus a heavy emphasis on capital markets. That's probably the one thread that has run throughout my career. You know, I've done various things, including being an authorized representative for a financial license for a fund manager and these types of things that give me a great scope and breadth of understanding of capital markets, particularly down here, but also help to give me probably a slightly different perspective to many mining company CEOs who know a hell of a lot more than me about engineering and geology and all of those sorts of things, but perhaps haven't sat in the sort of seats that I've sat in.
So for a moment, take us back, humor me for a moment. Take us back to the summit takeover. You've got Paladin with the Borjoff, Chalmers, Swaby, and Garo team at that time, if I recall, if my dates are right. Tell us about that, and kind of tell us how that started and how the battle kind of ensued there, and how it came to finish up.
Well, if you look at it, 2005 was quite a spectacular year for many uranium equities. And I think it offers listeners and investors a very useful analog to how we'll see the bull market, the early stages of this bull market play out. And if you look back to 2005, if my memory serves me correctly, we had a setup where Paladin started the year at something like 4 cents and ended the year at something like $2. Summit started the year at something like 16 cents and ended above 50 cents. You had Uranium established, Uranium 1 was being formed back in those days. So it was already a very different environment in 2005 to what we see today, as we're just coming out of a bear market in this current uranium sector. So then by 2006, we started to have the first of the transactions. Hathor completed the acquisition of Rough Rider deposit in Canada. We had the Cigar Lake floods. We saw Uranium listing. And to fast forward to 2007, when we were really at the height of things, it was towards the very beginning of that year when Paladin launched its bid for Summit and needed to sweeten it on several occasions. It was just around that time that Paladin opened Langer Heinrich, so it was obviously had some real lift under its wings as a result of that. By about July, the Paladin share price had peaked, and we were starting to see a decline in both the uranium price but also equity values. As a result of that, I think there was an intensity to try and mop up the full acquisition of Summit, which they never achieved. They ended up getting something like about 88%. But we unfortunately were just the lawyers working on the process. So whilst it was great fun, we weren't exposed in the same way that the small boutique investment banks were. And the bank that was representing Summit at the time had rather cleverly put in a super fee provision where they got quite a generous cut of what at the time seemed an absolutely outrageous premium on the initial bid. And they literally took tens of millions of dollars off the table in fees because of the intensity of that bidding competition and the fact that because it was script for script, as Paladin's share price continued to rise off both market and company-driven catalysts, so too did the implied value of the takeover. So that was a good lesson for me, because at the end of the day, you can be a good lawyer, but you're still servicing somebody as a lawyer. And as one of my early mentors put, the legal profession is the world's second oldest profession and got an awful lot in common with the oldest one. So from that point, I realized that I needed to be a bit more in the driving seat as to what we were doing. But there were so many transactions going on at that time. The Areva takeover of Uranium towards the back end of 2007, I mean, that made the Summit numbers look almost modest. I think it ended up being about $2.5 billion. Even the break fee on that transaction was something like $75 million. And by 2008, you had Paladin completing the acquisition of Fusion. The sector had come down quite a lot on the spot price and intensity. And of course, we were then re-establishing a base in the spot price before the structurally driven recovery, which was cut short by Fukushima. So by 2009, I was working in the uranium sector proper in Namibia.
I want to probably just, I don't know for sure, but probably the oldest profession out there is probably banking. I might be wrong, but it's interesting just looking back at that and then getting your perspective on it. Kind of being in the background there kind of watching what was going on in the sector and seeing what was happening in Namibia with what Paladin was doing and what Uranium was up to, and those situations that were playing out. And
I should add, Andrew, one thing I didn't say amongst all of those numbers, the one number that I do remember really well is that the final acquisition price for Summit was $6.22 a share. And remember, in 2005, they were trading at something like 15, 16 cents. So it was a spectacular result.
Right, and it puts it into perspective with how much things can get out of hand, I guess, and go up, and then of course the resulting onslaught of M&A activity and kind of sloshing around of money that goes into it towards the top. Yeah, it's certainly interesting, and I remember. Obviously, we know the end of the story with Summit. We know how that ended in 2018 with Paladin finally finishing that up. And I remember the only experience that I knew of with Summit was 2017 when the stock was trading around 11 cents. I'm not sure when I picked it up, but for a short period of time there was a completely stupid, out of the blue freak increase in that share price of Summit that occurred from 11 cents to I think $1.20 or 40 intraday on the ASX. I don't know if you remember. You can look at February 2017, but quite interesting. No clue about what happened there, but that was one of the best results we had so far in this new bull run.
That sounds like a fat fingers moment, doesn't it?
Yes, completely crazy. I don't know what happened, but it worked out pretty good for somebody, and not so good for others.
Yeah.
But so take us back for a moment too, and you saw what was going on. You saw Areva take out Uranium. You saw what Paladin was doing. What was some of the things that you saw that you took away from that last cycle with this type of activity? What would you say were maybe some positive things you learned from those teams at the time, and what was maybe some negative things that occurred?
So I think the negative one is fairly easy to identify in that, as you said, it did get very frothy towards the top, and there was a large transfer of value. And much like a game of musical chairs, in the end, the investors left standing when the music stopped. Did lose a lot of money. Now, fortunately for retail investors, a large proportion of that endpoint value was paid by sovereign funds, although, as you've highlighted, there was a lot of Paladin scrip that was issued that didn't end very well. Enormous number of positives, and I think being involved at a fairly early stage in my career in both M&A generally, it wasn't only the uranium sector, of course, but specifically the uranium sector, and seeing something that could run so hard, it's helped me position during the bear market for what I think will happen, and I think given me a fairly high level of confidence as to how it'll play out. So I think some of the key learnings are that it's very important to be thinking now about the attributes of a stock that's going to make it more or less attractive once a bull market starts to mature into a consolidation round. So the way I look at it is we're only just coming out of a bear market at the moment. I think we can call the bottom of the sector. I think the supply disruption that we've had is enduring. We won't see much of that supply come on in the next few years. And so because of that, we can call the bottom, and we're at this fabulous point in the cycle where you've got a very asymmetrical risk profile. So your chance of losing 50% versus your chance of making 50% in a quality stock, of course, is tremendously good odds for investors. And it'll still be some time before you see a feature of a developing bull market, which is, I wonder if that's too toppy. I wonder if it's getting a bit expensive. Am I riding this too far? Do I need to sell, etc.? We'll be in the upswing mode in this cycle for quite some time, I think, probably 1 to 2 years, perhaps even longer. And the problem with the nagging doubt about has the cycle run all the way is, as an investor, as you well know, you can experience that at pretty early stages in a cycle. And if you experience it too late, well, you should probably be doing something else and just saving your hard-earned pennies and putting it in the bank. What's so important about a consolidation round is companies that are well positioned to be attractive strategically in a consolidation, they can defy some of that gravity as a bull market starts to mature. The less attractive assets and the inevitable companies that don't really have much to do with uranium, but perhaps were astute enough to put it in their company name and get it somehow into their ticker code, they will tend to fall by the wayside first. And as we saw even in 2012 after Fukushima, companies that had that appeal continued to grow. So even after Fukushima, we saw CGN pay 2.2 billion for the Husab project in Namibia. We saw Uranium One, backed with Russian money, pay $1 billion for Mkuju River in Tanzania. At a time when the sector generally was in quite deep decline as a result of the events at Fukushima. So that's the first thing I'd say. Now, with that knowledge, you're then in a position to really focus on what are the strategic imperatives for a company. And I think it's a few things. The first one in this sector in particular is jurisdiction. I can't talk enough about jurisdiction as it relates to uranium, and maybe we can break that down a little later. The other one is scale and size. You need to, in any industry, as it's going through a consolidation phase, you need to be asking yourself, who's actually going to pay the money here? Because whilst in any cycle or any commodity, you'll experience typical dynamics such as mid-tiers trying to become major through acquisitions, majors trying to become bigger than the other major through acquisitions, divestments of smaller assets as they get bigger, etc. Uranium's got a couple of interesting aspects. The one is, I believe that it will become attractive for certain types of diversified miners. At the moment, we've got an exodus by diversified miners. You've got Rio Tinto trying to get out. You've got BHP who lost interest a long time ago, but have got a byproduct revenue that they're looking to continue with. But some of the other diversified miners, particularly those with strong links into China, I think they will find uranium interesting. So you need to say, okay, so if you're going to have competition for a takeover or mergers and acquisitions from a group like that, what are they going to value? And they're going to value de-risking the aspects of uranium mining that they find the least familiar. And that's the social and environmental things. Radiation, you know, they'll always be able to find employees who can deal with radiation risks and the technical aspects that pertain to that. It's the geopolitical and jurisdictional risk that is the most disconcerting to groups like that. And then the other major feature that we've got in the uranium sector that you do see in energy markets, but you don't see a lot in hard rock minerals, is the emergence of the sovereign players. And when you think about it, it makes a lot of sense, because the most important and crucial thing that uranium does is it keeps the lights on in very large cities. So it has an inextricable link with national security, grid security, the industrial growth of very significant nations, etc., etc. And the sovereign money that comes into a sector like this and starts paying big money for acquisitions, they're not resource specialists. In many cases, the people on the team have probably never bought a mine, let alone something that's got the complexity of a uranium mine or a uranium project. And so they're going to be very focused on risk. And I believe what's essential ahead of the next consolidation round is at least a feasibility study, something that's got the technical integrity to stand up to conservative third-party due diligence analysis that'll be undertaken by these sovereigns. And by the way, that's not a given in uranium or any hard rock mineral space for that matter, because as you well know, the game for many juniors out there is to take a project as quickly and as far as they can and then be swallowed by the next bigger fish. So not all companies have been fastidiously doing their technical information, taking their time where they need to, risking losing a little bit of favour on the markets because they spent longer on QA/QC or were more conservative on drilling out a resource than they needed to be. There are many examples of companies that have really just tried to do as much as they needed to progress the project to the next stage before they were taken out. Many of those were taken out in the last boom, and they're probably the projects that are still undeveloped, but there are still some relics of that thinking that exist in the sector, and they won't easily pass conservative third-party due diligence. And then back to jurisdiction. So the third thing that a sovereign looks at very closely is jurisdiction. And with the current level of geopolitical intensity and uncertainty in the world, you have to look at a project in a particular jurisdiction and say, well, who can even buy there? So that rules out Canada in the most part, and Australia largely, and B, how are they going to be received by the host nation, given that uranium and nuclear is done on a bilateral basis largely. And that puts countries like Namibia in an incredibly interesting situation, because Namibia it's friends with the Russians, it's friends with the US, it's friends with Britain and Europe, and it's certainly friends with China. It's the only jurisdiction who produces uranium at any volume that can actually say that.
Right. No, and I think you covered a lot of good points. Certainly the jurisdiction and how these sovereigns and these other players in the market look at jurisdiction and so forth. And you're absolutely right on Canada and Australia. Very difficult. The U.S. Probably going to be a little bit more tight this next go around based on what happened last time. But it'll be interesting to see how they deal with those approvals when the time comes. So I want to look at kind of just talk uranium for a moment and nuclear power before we get into talking about Bannerman, and maybe we can kind of blast through a couple of these uranium topics and get your insights on them. So I kind of touched on it for just a moment, but give us just kind of a brief in your mind. Why nuclear power? What is your thoughts on why nuclear power is really the best form of energy?
So you can look at it from a few different perspectives. First of all, the technology of nuclear power is by far at a technical level the most viable form of energy, and I include renewables in that. The difference between burning coal and operating a modern nuclear power reactor is a little bit like the difference between trying to cook on an old wooden stove without a chimney and buying something from a fast food restaurant. There's just a vast number of innovations that have taken place during that period, and for that reason, you have a technology that is absolutely superior in every conceivable way, with one exception, and that's the public image of nuclear. And that's where the broader sector still got a lot of work to do. It is making progress. That progress doesn't get talked about enough. But it is making progress, but there's still a lot more that needs to be done. You can look at it from a safety point of view. Far away nuclear power is the safest form of electricity production in the world. Safer than solar panels, safer than wind, orders of magnitude safer than hydropower. And again, that's not really well accepted by many parts of the community, but it's an irrefutable fact. If you look at it from a ability of power source to converge with big policy trends, and for me in energy, that's always very important, particularly after the oil crisis in the late 70s, that affected every aspect of energy in every corner of the world. And I think we've got something that's a loose analog to what we had there. We've now got climate change policy that is affecting every aspect of energy in every corner of the globe. And nuclear power, in spite of its image problem, is far and away in the best position to both deliver clean energy without emissions, but also create the impact that climate policy is designed to achieve in a short period of time. And that narrative is really starting to get a lot of momentum now with the great work that Michael Schellenberger is doing, some of the other very credible representations made by James Hansen and other very well-respected scientists and climate scientists. We are starting to get that narrative a little bit closer towards the open agenda at the moment. And then from an economics point of view, now this is an interesting one because quite often you see analysis typically done by the renewable energy lobby showing how expensive nuclear energy is. Most of the time they've cherry-picked some disastrous projects. So if you were to look at Olkiluoto 3 in Finland, for example, or a couple of the quite infamous Westinghouse reactor builds in the US of recent times, what you see is vast overruns in both capex and time. Now, the reason for that is they were being built as first of a type new reactor technology. They were the Gen 3 Plus era. And it's a little bit like saying, my choices are to go and buy a Toyota from the car dealership, or I'm actually going to build a car from scratch in my garage. You can't do that and expect to build a car from scratch in your garage at a price that's competitive to the Toyota dealership. I think the problem here is that the vendors of those reactors, which is most of the Western world, underestimated how well their subcontractors would be able to perform on the first build of these reactors. So anyway, so back to my point, the numbers are being cherry-picked in terms of the cost of producing nuclear power to try and make it seem unattractive, whereas the reality is precisely the opposite. A nuclear power plant that has not been affected by serious delays and cost overruns is being built at a capital intensity of about $6,000 to $7,000 per kilowatt hour. So in other words, an upfront investment of $6,000 to $7,000 buys you the equivalent of 1 kilowatt hour of power producing capacity. Now, the thing about nuclear power is capital is by far the largest expense, and as many as your listeners would understand, the U3O8 or the yellowcake component of producing power is very, very small. It's the price inelasticity of power to U3O8 is absolutely extraordinary, and you don't find it in any other energy source. So it's all about capital. So of course, if you choose a $12,000 or a $15,000 per kilowatt hour, which is what these failure examples were, well, you can make nuclear power look very, very expensive. But conversely, if you see what's being done in China with the Hualong 1 reactor, China is producing that reactor, we believe, at about $3,000 a kilowatt hour. And once they're building 10 or 20 of them at a time, they should be able to get that cost down to more like $2,200 a kilowatt hour. So that's an absolute game changer, because that's cutting in half or even a third the capital cost component of nuclear power. And so what we see as being a very, very important trend driving a very optimistic view of demand growth in the sector is a sharp dip in that capital cost, both for domestic Chinese reactors, which is where all the growth is, but moving into the next decade, a value proposition that can really channel and fuel the Chinese nuclear export ambitions. So I think if I was to wrap all of those things together, I see nuclear power being an exceptionally clever technology that is well harnessed, that is safe, that is economically competitive, and it offers one other thing which links a lot to the discussion we've already had, and that is energy security. So one of the reasons why Japan was so reliant on nuclear power before Fukushima is you could fit the next 10 years of Japanese nuclear energy requirements into a single warehouse. It's incredibly dense power. And for a country like Japan that has almost no natural energy resources and has throughout history been utterly dependent on foreign sources for its industrial and military security, that's extremely appealing. And when you add that piece into all of the other climate change advantages of nuclear power, I think it will reassert itself as an absolutely essential part of the energy mix of most large economies.
Yeah, I think you covered a lot of good stuff there, and I would just add to your point about the Toyota, buying a Toyota car or build one in your garage. I would just say that, you know, there's no reason to change what works quite well, especially in the case of nuclear. And there's a set of designs worldwide that have been established by different countries, different organizations, different engineers that work incredibly well. And it's like going down and saying, well, am I going to buy a Toyota today, or am I going to go buy a Tesla and take my chances? Because the fact of the matter is you don't care how you cut it. There are some older companies, older designs that work incredibly well, and that's why you have the cost overruns that you're talking about, and it's evident in the United States. And the other piece of that too is the experience. You touched on that as well. The experience of these contractors that construct, it's a big deal. Coming from a construction background myself, I know that we've seen those challenges watching other entrants to these different sectors not have any clue of how to build something that's either a new design or even have the experience to be able to do what they need to do to actually get the project done on time and on budget. And so I think it's a set of issues that can be fixed. I think it just needs to be considered that we have an amazing design. The pressurized water reactors in the United States, the older designs are fantastic. It's the same stuff that's been in the nuclear submarines and a lot of the military hardware of the United States, which is all mostly powered by nuclear, which is nothing more than a small modular reactor that's been running around for, I don't know, probably at least 50 years of operating history. And so it's really interesting. And the other piece of that too, Brandon, is the fact that the red tape also adds to that cost. And in the States and in places like Europe, I know you mentioned Finland, these places are notorious for overly excessive, overburdensome red tape, which has also caused these things to overrun as part of it as well. And so I think there's a number of issues with it, and all stuff that can certainly be fixed. So on nuclear power, one more thing I want to ask you. What's your thought on the place that small modular reactors, what's your thoughts on taking this to a commercial level, taking basically design and technology that's been around in a small form for a number of years in naval applications and applying this to a commercial wide setup? Do you think small modular reactors has a future?
Yeah, I definitely think it does. We've seen small modular reactors in its various types of technologies stalled largely since Fukushima, but we are seeing almost all of those groups start to be re-energized. The laggards were some of the US and Canadian technologies, and we've just seen in really recent months a lot of support from the Trump administration for that technology so that the US designs can get back in the race, so to speak. But from the nuclear powerhouse of the 21st century is either going to be Russia or China, or possibly both. And both of those nations have realized that SMRs play a very important role in the energy mix, and they've been not only promoting and encouraging their own technology development, but they've been offering platforms to build commercial reactor, basically pilot projects or test projects. So we've seen floating reactors completed in the US, in Russia. We're seeing other forms of SMRs being deployed both in Russia and China. And that very much deals with your red and green tape point that you made earlier. The single biggest thing that both Russia and China can do to give their industries a leg up is not to impose or allow unfair trade practices. It's to remove the massive inhibitions that some of these regulations impose upon a domestic industry. And there's lots of reasons why it's particularly applicable to countries like Canada, Russia, China, even Australia. And that's because less populated countries have got a more distributed electricity grid. So it's always interesting to look at anything nuclear from the perspective of Australia, because Australia is probably the only significantly developed nation that is utterly anti-nuclear. Even Italy at least imports 10% of its nuclear power from nuclear from its neighbours. So in Australia, the issue is largely political, but equally you could probably only cite 2 or 3 conventional 1 gigawatt reactors in Australia without really having a negative effect on the electrical grid, because Australia's been built on relatively small coal-fired power stations distributed relatively evenly across a large land area. And so they just wouldn't be able to cope with a 2, 3, 4 gigawatt condensed energy source. And that's where SMRs play a real role. And you can take that thinking and apply it to places like Canada and certainly Russia with very remote areas, and to some of the inner parts of China as well. The second point I'd make about SMRs is the fast breeder technology that has the capacity to reprocess fuel is a very important part of the go forward PR game or battle that nuclear is fighting out there in the hearts and minds of the population. For many years, the nuclear waste has been seen as the Achilles heel. Now, on the one hand, I can argue, and no one does it better than Michael Schellenberger, but I can argue that, well, at least we know where the waste is. We haven't just put it up a chimney or into people's lungs, etc., etc. But you don't even need to go there in terms of arguing the merits of nuclear waste over other forms of energy waste when you're using a fast breeder reactor, because that waste is, the toxicity and longevity of that waste form is reduced by such a huge extent that if you look at, say, GE Hitachi's PRISM reactor, if my numbers are correct, I recall that the half-life of the final daughter products out of that waste stream is only 300 years. And that's a game changer for the sector, and that'll become more and more important. And where we probably will end up in several decades' time is a situation where nuclear energy is truly regarded as a renewable energy source, because a large proportion of the industry will be able to operate from previous industries' waste streams. And that's incredibly exciting, and it's also very reassuring in terms of the capacity of the people to industrialize on the planet without having a strong negative effect through energy waste.
Right, and I would say with the SMRs as well that it's attractive for countries who are also smaller, certainly island nations, smaller island nations, and also smaller countries that are on a shorter energy budget. So, places certainly in Africa, South and Central America can certainly adopt a small scale nuclear program and also be within their budgets. So I think that's promising in itself, to where you can take it the other direction and look at these countries that have lower budgets and can't quite afford, dumping $15 billion into a big reactor, conventional. And I think you're right. I think the feeder technology or the breeder technology is interesting. On that subject, I want to ask you, and we already talked about Australia, so I'll leave that one alone. But how far out do you see the technology before that really starts to be confirmed and something that can actually is economically viable for nuclear power, the breeder technology?
Well, I think the economic viability depends on the power source. If you're running off fresh uranium that then goes through a number of reprocessing iterations as part of the closed circuit, well, then essentially they're viable in the right circumstance today. The right circumstance being not competing with a conventional reactor where you've got that grid demand, but in a situation like what you've identified, where you just can't put a conventional 2, 3, 4, 6 gigawatt reactor, so you're then comparing a SMR with other alternative power sources. So the viability of fresh uranium is pretty much there already. Viability of spent fuels, that's probably still some time away. And that would become more of an impetus initially commercially once we see uranium price recover strongly. So if you're trying to put a model together on an SMR that your alternatives are buying fresh uranium for $50 or $60, or trying to reprocess spent fuel or other types of nuclear waste products for insertion into that reactor, you're going to buy your fresh uranium every day of the week. And you'd probably do the same based on current technology, closer to $100 a pound as well. However, two things will happen. One is the sources of fresh uranium don't last forever, as we well know, and the price needs to go up. And secondly, the impetus to deal with the current levels of nuclear waste will increase. And so you're not just looking at the cost of reprocessing fuel versus the cost of fresh uranium. You're looking at those costs plus some form of credit that you get back for putting used fuel into a fast breeder instead of dealing with it in some other way.
Yeah, no, I think that's interesting, and the timing to get, I was looking at some of the technology, and for it to come out on a widespread basis, it seems like it's certainly not anything that would affect this current cycle that we're in. It seems like it's quite a ways off still. But do you see that the waste issue, Brandon, is of a large enough scale? Granted, what we are going to start seeing with solar replacement and wind turbine replacement coming to the end of their first generation usable lives, do you really see that the nuclear waste issue, obviously in the public it's a big deal, but when you really drill down and look at the total space usage and the concern, what's so bad about the storage?
Well, if you're prepared to have an open mind to the facts, there is nothing bad about the storage. So to back that up, I've obviously spent quite some time in the sector, but I have treated the waste issue with a great deal of serious review, particularly when I was first entering the nuclear sector. It was the concern area that I had, and I wanted to understand the facts. And I went as far as going up to Finland and reaching out to the utility there, TVO, and I was given a very in-depth, personalised tour of their waste disposal facility. And there's probably two of those kind in the world, one in France and then one in Finland, that do represent the industry's best thinking on long-term disposal of waste. And that facility left me in absolutely no doubt whatsoever that the waste issue can be permanently, safely, and at the right scale economically dealt with. So the only remaining risk is political. In other words, are there countries who won't require that level of handling? And I don't see that as a risk at the moment. And if you project forward, particularly when you look at how responsibly the Russians and the Chinese are treating the whole fuel cycle, the trend is towards, if you were to use Africa as an example, so let's pick an African country who's engaged with Rosatom on reactors. Let's start with Egypt. So let's say that you had a view that, oh, gee, I'm just not sure about Egypt in 50 years' time. Are they still going to be motivated to be dealing with their waste? Well, what's really important is that Rosatom are doing that. So when the Russians negotiate with Egypt, it's done on a build, own, operate basis, where not only do the Russians provide financing support, but they build the reactors, they operate it until they can hand over to the Egyptians. They supply the nuclear fuel and they take it away at the end. And I know firsthand that Rosatom is leading the field in terms of dealing with waste. They see it as an absolutely vital part of their strategy to be able to demonstrate to those host nations, but the world at large, that we will take that waste back and we will deal with it responsibly so that it isn't something that carries forward for future generations. So that's why at a personal level, I'm comfortable entirely with that. And I can also argue that whilst it does require special handling and it is a highly toxic substance, it's incredibly concentrated and we know exactly where it is. We just haven't put it up a chimney or put it out in fields to be dealt with by the next generation, which is, what we're starting to come onto with solar, as you say.
The oversight of the agencies, the IAEA, for example, and so forth. I think that there's a lot of oversight that occurs with any of these nuclear nations. So I think it's interesting that people say, oh, well, what about people trying to steal it? Well, good grief! If you look into the logistics of trying to set up a heist like that, trying to move this where it is in these facilities and the sizes, I mean, it's just laughable that people think that some thief in the night's going to show up and steal a rod. But anyway, we'll leave it.
That's pretty good for Hollywood, but it doesn't have a lot of bearing on reality. And if someone wants to create mass mayhem or mass loss of health or life, there's probably 100 substances that are far more dangerous than enriched uranium and far easier to get access to. Yes,
I agree 100%. And speaking, you mentioned Hollywood. I see it looks like HBO is supposed to be putting out something on Chernobyl. So it'll be interesting to see how I'm sure they'll spend it in the worst way possible. It'll be geared towards maximizing views and revenues. So. Mm-hmm. So I want to ask you, let's talk about uranium prices for a moment. And if you want to give us some predictions, that sounds great. Where do you see the long-term uranium price in terms of spot and long-term contract price, say, over the next 3 to 5 years? And do you think we'll see all-time highs?
Well, all-time highs, if you track the real uranium price back to the 1970s, and we do that in Bannerman's corporate presentation. If anyone wants to go onto our website, they can download that and see also annotated with a number of catalyst trigger points over that period. The all-time uranium price spent several years above $160 a pound in real terms in the late 70s, early 80s, and that was driven by the oil crisis. And interestingly, the sector itself was absolutely prospering. Nuclear power was did incredibly well in that period despite those prices. And it was only 3 Mile Island and the associated publicity with that started to take the wind out of the sails. So it's always difficult to make a call about eclipsing those sort of levels of pricing. And that will be driven by demand. Does demand start to fulfill something like the World Nuclear Association's harmony objectives, where they're anticipating another 1,000 gigawatts of new installed nuclear by 2050? Or does it take a flatter projection such as the World Nuclear Association's upper scenario? And I think that is the range that we can expect if you take an optimistic view of what nuclear power can do for the world, and you assume that climate change policy continues on its current trajectory. Now, the reason why I say it's demand growth driven is to see those sort of levels, we will need to see a very solid demand picture that continues unabated despite rising uranium prices. Now, in the range of where we are today to $100 is supply driven and it's shock driven. Because we've got a pretty good idea of what let's call it the minimum amount of nuclear fuel demand is over the next 20 years. You'd be a brave person, a brave pessimist to predict a large scale decline in nuclear power, given where the world's at with energy. We would probably need some sort of macro global shock event to create that, in which case, we might be more worried about running away from a huge meteor than we are about how our uranium stocks are doing in our portfolio. So nuclear power's there and it's there to stay. But what isn't there to stay is the supply of uranium. So for a start, we've got a number of large mature mines that are depleting their resources and tapering down in terms of their level of production. Cigar Lake's a great example in the North American context. Richest uranium mine in the world, pumping out fabulous ore at about 18% uranium, or U3O8. But it runs out of reserves in 2027, and it will be no longer. There are many examples on a less abrupt decay trajectory in Kazakhstan because the nature of ISR deposits, particularly the absolute tier 1 deposits that they brought through into production from the Soviet era. The nature of those deposits is that they deplete they have a long, expensive tail to them. And on our analysis, all of the viable uranium projects in the world will need to come into production over the next 20 years just to meet the decay portfolio in the current supply. And that includes the viable care and maintenance mines coming back on into production. I say viable because there's an awful lot of uranium projects out there that are not viable in that timeframe, not without changing political assumptions, not without dramatic increases in technology, or not without such a high uranium price that it enables those projects to defy economics. So a recovered uranium price in that band I see as inevitable, because we can't have a situation over the next decade where the nuclear power stations run out of fuel, and I don't see any realistic basis for trying to work with a scenario where we see a large-scale decay in the volume of nuclear power that's produced. And in fact, it's quite the opposite in all of the probability scenarios that I'm working with. Now, where that gets exacerbated is if we see further supply shocks from any particular environment, or if we see sovereigns who start a stockpiling process in earnest. And that might be done either to obtain the material, or it might be done to promote exploration through a runaway uranium price. Not that great for producers because it's hard to make long-term decisions when you've got a spiking uranium price, but absolutely fabulous for equities investors. Good example of that is the manipulation of the rare earth market that we saw by the Chinese in 2009, 2010. It had the effect of laying on paper for Beijing quite a comprehensive overview of all the world's REE deposits because it spurred such an incredible round of exploration. I think it was masterful. I think they played Western capital markets for a fool. And now the supply is assured in a number of rare earth elements, and we've got a much clearer picture of where that material can come from and where China's relative strengths and comparative advantages lie.
So you're in a country that has quite a bit of natural gas production. So, power utilities around the world and specifically the U.S. have used natural gas power due to, low prevailing gas prices, and also maybe a secondary element of the fact that, it's a little bit cleaner. How do you see low natural gas prices going forward? And do you see low natural gas prices kind of tempering the uranium prices at this point?
So I don't see low natural gas prices, or I don't see very low natural gas prices, sort of $2 to $3, as a given going forward. I think there's a number of elements that point to natural gas, particularly unconventional in the US, increasing substantially. And that's very rarely brought into the minds of investors when they look at nuclear. So together with the fact that the key nuclear markets don't have particularly good access to gas. So China has, given the size of its economy, relatively insignificant resources of domestic gas. They are trying to build pipelines up to Siberia, and they do import quite a lot of natural gas from countries like Australia. But in the scheme of things, it's pretty small, and they're not so keen to be as reliant on those markets. So I think the key role of gas going forward is more its flexibility, its ability to load, follow, and load shed. And that then comes down to whether nuclear establishes a level playing field with renewables, or whether we continue to operate in the same paradigm. So intermittent renewables, as your listeners are well aware of, had a very significant effect on grid stability and grid security, and in particular the resiliency of a grid, given that grids that rely on nuclear and coal for their resiliency, they can't respond very quickly to a wind event that might blow up in 60 or 90 minutes and deliver tens of gigawatts down an electricity grid. And that's where gas has a comparative advantage, in that the capital cost is low. The cost of gas-made power is predominantly the gas itself. So if you have a gas power plant that's designed to turn on for 6 hours a day when the wind ain't blowing and the sun ain't shining, that fills a need, and it also is artificially supported by the various subsidy regimes and the way that intermittent renewables is preferred over solutions like nuclear. Now, if we see climate change policy move in two directions, one is to levy the full cost of power, including carbon cost of power, onto gas, then that will differentiate positively towards nuclear. And then the second thing is, if we see an acceptance by policymakers of how costly the deterioration of grid resilience really is to economies, then I think what we'll start to see is renewables play on a more level playing field, where perhaps they need to bid power based on a minimum baseload component, where they either need to price in the establishment and running of alternative load following sources, or they need to incorporate storage into their production, so that they're not just bidding on the solar power that they get for the 8 or 12 hours a day when the sun's shining brightly, but instead they're bidding on providing 15 hours of power to cover both the peak stages during the dark morning and the peak stages during the dark evening.
So what are your thoughts on higher uranium prices and how they might impact old reactors in high-cost jurisdictions? So like the US, for example, do you see a $100 uranium price as a reason to be less likely to attempt to keep older reactors online as they go through maintenance state and also relicensing? Or is the price really irrelevant? And this whole old reactor US shutdowns, is that really just irrelevant to the cycle at hand?
No form of economics is ever irrelevant. It's just what is its positioning amongst the subset of relevant factors. Amongst the subset of relevant factors, it's the red and green tape and the compliance costs that is more important for old reactors versus the uranium cost. So if you, and bear in mind that these utilities, they're not fueling their reactors with $25 or $30 uranium. They've got a portfolio of buying that would have a medium price somewhere in the 50s or 60s, perhaps higher if they contracted a lot during the last boom. So there isn't as much of a gap between $100 uranium and the current portfolio price as you would expect looking at where spot is right now. But the reality is that to increase their average cost of U3O8, ignoring conversion costs, enrichment costs, fabrication costs, to increase that by $40, we're talking in many instances less than a cent a kilowatt hour. So it does affect competitiveness in some way, but not as much as things like interactions with the regulator, levels of green tape, red tape, and the point that I made before in terms of a level playing field with renewable energy in particular. So a zero emission credit that rewards nuclear power for its clean energy source and its zero carbon emissions, that goes an awful lot further than having incredibly cheap uranium that they can put into their reactors, or that they can put into their fuel cycle that ultimately goes into the reactors.
Yeah, I think that's a good point that you brought up, and also the fact that the price is much higher than what we see today. This material is already secured; it already has a price to it much higher than where we are today. So I think it's good to clarify that for some of the audience who are concerned about U.S. shutdowns and some of these plants that are really just kind of losing money as time goes on and so forth, and that kind of concern from that angle. So I think it's good that you clarified that, and you had a good couple of points there for people to understand. So let's talk fuel cycle conditions. If long-term contracting comes in as planned, is there enough fuel infrastructure such as conversion, enrichment, fabrication? Are these things available to deal with the growth in uranium production and, of course, the big demand coming out of that could potentially be occurring in the next few years? Do you see kind of a bottleneck for that infrastructure coming?
There's potential bottlenecks in conversion and fabrication. Enrichment, we still have significant overcapacity. So in the short term, absent the closure of enrichment facilities or the unexpected closure of enrichment facilities, I don't see that being an issue. Conversion, obviously with the Honeywell facility or ConverDyn's facility in the US metropolis being on care and maintenance, it's very tight. But there is conversion capacity that could be opened up in the right economic situation, both there and also Cameco's got excess conversion capacity. Orano's got some excess conversion capacity that would come at a price but could be turned on relatively quickly. And that's good for the uranium market, because at the end of the day, we want utilities and other buyers to be buying the uranium and pushing it through the fuel cycle, not having a bottleneck at the conversion or enrichment phase where they have to scratch around looking for stocks of already enriched uranium or already converted UF6 that they can stopgap into their fuel cycle. Now, over the long term, I think the security of the fuel cycle will work itself out. The predominant growth, as your listeners would know, is in China, and China are working towards having the full fuel cycle capacity within China, and they will make sure that that is right-sized ultimately for both their domestic reactor fleet and also their export ambitions, because they certainly want to emulate the build, own, operate closed cycle type reactor constructions that we've seen Russia producing very successfully recently. So long term, I've got no issues. Short term, there are some bumps in the road. Significant bumps, whilst it would create volatility across the fuel cycle, are ultimately not great for uranium. But at the end of the day, these things have to iron themselves out. It's just which end of the balloon you're squeezing and what are the short-term implications on the U3O8 price.
So on fuel cycle services, on the costs, just give us kind of an overview, or at least your view on fuel cycle costs back during last cycle, and how technology in the fuel cycle has improved, and as a result, have costs more or less stayed the same, or have costs gradually gone up with inflation and other factors? How do you see that on the fuel cycle side?
So by and large, costs have gone down significantly, in the same way that U3O8 has gone down significantly. It's not good news for the long-term health of the sector, in the same way that low U3O8 prices have almost stymied exploration globally and certainly put existing producers under enormous pressure. The same can be said for the downstream fuel cycle participants in conversion, enrichment, and to a lesser extent fabrication. Those services, so conversion and enrichment, they also have an analogue with the uranium sector, because typically they operate on long-term contracts with a short-term or spot style price designed to balance over and under production or over and under supply of those particular services. So much the same as following a spot price is not particularly indicative of the capacity to finance mines in the future, because most mines are financed off a long-term contract price. Following a spot SWU price is not particularly indicative of the generalised cost being paid by utilities to enrich their uranium. Now, what I would say about technology, because I get asked a disruption question quite a lot. You know, where could your thesis be wrong? Where could there be disruption? And one of the technologies that I've been following closely, global laser enrichment technology that Silex and Cameco now have. So that's one to watch. It's had some very serious delays and stoppages, and in fact, it looked like it was almost entirely off the table last year. It does have the potential to benefit from Section 232 rhetoric and potentially Section 232 actions. But if you're looking at that as a disruptor, I think it's got a very minor role to play in the short term. So let's say that they do prove the GLE technology, because it's still not commercially proven. It's still scientifically established but not commercially proven. So they'd have to build a facility, get access to the DOE tails facility, and on their plans, they think that they could produce in the order of 5,000 pounds per annum equivalent. So it's really the same as a large mine. So one extra mine, is that disruption? No. Is it additional supply? Yes, but highly contingent. Its potential to disrupt is many, many decades in the future, because it would have to be so advantageous to justify closing down existing enrichment infrastructure that's been built at enormous cost. And like your Toyota example, it's been running absolutely perfectly for many, many years. So I would see it as more of an enabler rather than a disruptor. If the GLE technology does in fact work and works well, it's got a very important niche role to play in reprocessing waste. And, both for the planet and the nuclear industry in general, the more value we can get out of the existing stored waste, the better.
So let's talk recontracting for a moment. Time frame. When Section 232 is out of the way, how much time do you see before utilities start coming back into the market? What's your view on that?
Well, that's very much going to depend on the complexity and implications of the Section 232 decision by the Trump administration. In its simplest form, if the Trump administration was to say no action, or at least no action on the U308 end of the fuel cycle, then utilities would be able to start reassessing their procurement strategies, making decisions and moving on. And you could see that start to happen as early as September, when we have the World Nuclear Association's annual symposium in London. The timing associated with these big conferences is very, very important, because if you think about the nuclear industry, it's an enormous industry. It's very complex. You've got very, very smart people who tend to be experts in their narrow little field, who don't always talk to each other very much. So these conferences, there's about 4 of them a year, are extremely important for when the industry gets together, pops their head up from the detailed work that they've been doing, and gets a generalized sector overview. So they're always, you can track them over time. You can link a number of catalyst events to these big conferences, and in particular the one that's in London, which is the centralized showpiece of the nuclear sector. So the earliest you could see activity coming on is once utilities go home from the conference in September and start evaluating both what they've learnt from Section 232 outcome and what they've heard from other parts of the nuclear industry, and then they would start their procurement programs from there. If it's a complicated or generalized solution that requires a lot of detail to be worked through, well, then it could take them quite a bit longer, particularly if it's a solution that has the potential to disrupt their procurement activity. So an example of that would be what the petitioners have asked for. If we see a 25% quota that is endorsed but without a lot of detail, well, there's going to be a period of time. Does it take 3 years to come in, 4 years, 5 years? How does this work? How does that work? How do you deal with existing stockpiles, et cetera, et cetera? There's a lot of detail to be resolved. If it's a more simple solution, for example, Department of Defence just says, right, bang, here's a £5 million per year contract, and we're going to stockpile on behalf of military strategic requirements. and we're basically just starting a tender, well, that's easy to understand from a utility perspective, and something that the uncertainty will lift very quickly for them. So then the final thing that I'd say about utility contracting for your listeners is it's quite a long process in itself, and it depends very much on the size and sophistication of the utility. So the very big utilities such as Exelon, who have been contracting fairly consistently over a long period of time, who've got teams that have been in place, both legal and commercial teams that have been in place for a long time, who've done it before, they can get from a board decision to an agreed contract, they can condense that process as much as a couple of months. They know who to go to if they need it done in a hurry, if they're not trying to open up new markets and new diversity of suppliers, etc. Now, for a utility who is smaller, who don't have the same level of experience in their teams, who may well have not undertaken a request for contract process in the last 3 or 4 years, and there's many of those, the process is much longer and it can take up to 6 months. And it's that dynamic when you start to see what's often called the rush for the door concept in long-term contracting, where you have the bigger utilities acting more quickly, A, because they have greater levels of analysis and confidence, and B, because they can get the process slammed shut faster, absorbing any of the available cheaper pounds in the sector, and then the mid and small utilities realising that if they don't get after it, they're only going to be left with the expensive end of the production curve. And that's when you see a high level of intensity coming into contracting. That's what we saw in 2005, 2006, and even into 2007. But that will require significant certainty coming out of Section 232 if we're going to see it this calendar year.
So that brings me to my next point. When you go back and you look at the volumes that occurred in the years you mentioned, 2005, 6, and 7, do you see this time around, do you see that the global utilities, they'll be kind of, like you kind of said, they're a rush for the door, kind of a joint effort, a joint rush, if you will, to move into the market kind of all around the same time? And if you don't see it that way, what do you see playing out?
I think it would require a significant shift of perspective from where the utilities stand at the moment for us to see that level of intensity in the short term. And in some respects, that's good. It's probably preferable for companies like Bannerman if we see a slower build in the uranium price, so that we see a more balanced market before potential intensity of that nature starts. But putting that to one side, the reason I say that is there's a number of aspects of the fuel cycle, and in particular uranium supply, where the penny just simply hasn't dropped with most of the utilities. There are a couple of exceptions who do independent analysis, who do their own modelling, who are very, very bright analysts who are capable of having a proprietary view on the sector. But by and large, the utilities tend to follow the publications of one of 3 consultants in the sector. And so there's a huge amount of groupthink that goes on amongst those groups. So the pennies will need to drop. Now, if they all dropped at once, if the world's utilities saw the uranium sector like I see the uranium sector, well, I tell you, we would have a rush, and it really would be that, with at least as much intensity as we saw in 2005. But as you know, Andrew, things don't really work like that. So it's going to be what events lead to a shift in that thinking over what period of time. And history tells me that that is less likely in the absence of some big catalyst, like pick a catalyst, a big issue in Kazakhstan geopolitically, or perhaps Cigar Lake needing to go down for a period or something like that. That would sharpen their thinking. But absent that, I think we're a little bit more on the slow burn. And at the end of the day, that's a preferable scenario.
Do you see those dates lining up as, say, a 2021 through like a 2023? Where do you see that? Do you see as these contracts roll off through that time frame? And I know you probably have a pretty good idea, given your access to some of the consultants. Does it look like a 2021 onward type situation, and do you see it lasting over a couple of years?
Well, first of all, the access to the consultants is not where I try and make my decisions, because I want to avoid that groupthink. So we do our own modelling, but you're right in that I have access to some interesting and brilliant minds in the sector that are constantly offering new perspectives, sometimes good, sometimes bad, that we spend a lot of time evaluating and thinking about. The point for listeners, I think, is that you say 21 ahead of 23, and I think that's an absolute crunch point. But if we get that far without utilities having substantially re-entered the contracting market, because the nuclear fuel cycle takes about 2 years. So from the uranium being put on a ship at the mine to going through conversion, going through enrichment, going through fuel fabrication, and being transported between all of those steps and ultimately to the nuclear reactor, in good time, you've got minimum 2 years, quite often more like 3 years. So if utilities need to cover 2023 positions, and their need will be acute by 2023 if they don't start soon, then by 2021 there will be a rush on U308. And if it's gone that long, then some of the earlier comments that I made about serious supply disruption will start coming in. Because if utilities are seeking to contract with new production on only a 2-year forward outlook, there's very, very few new mines in the world that could come on, and just about all of them are quite small. So the utilities would have to be relying on the 3 viable mines that are on care and maintenance in the world being not only able but willing to come on in that time frame. So if they've left it until 2021, the extent of the deficit in the sector over that period will mean that we are in a deep supply disruption scenario. So again, from both the perspective of an equities investor and the perspective of the health of the nuclear sector more generally, I don't see that as a preferable scenario. It does mean that whoever's holding until 2022 will wake up millionaires, but it's not really a good outcome. It would be far better to see a more normalised return to balance between now and 2021.
Right. And when I was speaking of outside consultants, I was speaking of the consultants that are kind of behind the scenes that not you would expect, such as Nuclear Fuel Associates and some of these better minds, not specifically the poster child consultants.
Okay. Right. Great taken. Thank you.
Absolutely. So restarts and new mine production. Brandon, who and at what price do you see restarts with existing mines that are sizable? And then what new notable mine do you really see hitting first during this cycle? Give us your thoughts on who might restart quickly, well, within perspective, of course, and what notable mine do you look at in the world right now, a development project that you could potentially see come on relatively quickly and maybe be one of the first in line?
So on the restarts, I think the world's attention is obviously focused on McArthur River. And it's a topic I would like to address because there seems to be this perception tending towards the bear case on uranium that, but as soon as we see uranium start to recover, McArthur River will turn on in 6 months, 12 at the outside, and fill everything in. And it just simply won't happen like that. And so for your listeners, McArthur River is the world's largest uranium mine, was producing 16 million pounds before it was put onto care and maintenance. Cameco, second largest uranium producer in the world, is the operator of McArthur River and Cigar Lake, which is second largest uranium mine producing the highest grade material in the world, both in Canada. So the thing about McArthur River is Cameco had to lay off 500 quite specialised jobs. So point number one, the longer it takes them to restart, the longer it will take them to restart because they'll have a lot more trouble hiring. But the bigger issue, there's the price, but there's also the time. So if you were to glue together all of the things that Cameco have said and sort of the way that I see the sector and so on, my best guess on it is that Cameco would be willing to start contracting once the spot price has recovered to something like $45. There's typically about a 20% premium if you're locking in contract prices going forward. It would be done in a upward trajectory, so the utilities would be relatively motivated. And so Cameco would expect, if they're using market-related contracts, they'd expect to get fairly attractive cuffs and collars off that sort of spot price. And if it's fixed-term pricing, they're going to get something that makes it actually worthwhile for them at that price. But it's not like we see $45 and McArthur River is going to be on in 6 months' time. I don't think it's like that at all. Number one, once Cameco does see a return to long-term contracting, I believe that their first priority is to make sure that Cigar Lake is fully contracted right out to the end of its mine life, which is 2027. Cigar Lake is an incredibly complex operation that's had many false starts, that has a absolutely unique set of skill sets in its workforce. And it is not the sort of mine that you could turn on, send everyone home for a few years, and then expect to turn back on. It's absolutely vital that Cigar Lake continues to run out to 2027. And I believe that that should be Cameco's first priority. So the initial round of contracting won't even help turn on McArthur River, in my view. It'll be more driven at making sure that Cameco's contract portfolio supports Cigar Lake. But the second point is they would look to start contracting for delivery commencing in minimum 2, more realistically 3 years' time. So let's say, pick a date. Let's say we've got uranium at $45 on December the 31st. And so January 2020 spent negotiating or starting the process of negotiating. So in the most optimistic scenario where we've got a real rush for the door situation, it's going to be 3 to 6 months for Cameco to build up that contract book to a sufficient level to infill Cigar Lake and also create enough contract deliveries to start McArthur River back on. So then we're talking mid-2020. But those deliveries would start 2023. So we would have McArthur River off for 4 more years in that scenario. And that's a penny that just hasn't dropped in the broader sector. And even amongst some of the very well-informed uranium investors, that's news. So I think we will see McArthur River come back on, there's no question, but not in the timeframes that many people expect. And that will continue a 30 to 40 to 50 million pound deficit out for the next 3-4 years, which will certainly create a tightened environment. In terms of new mines that would come on, it's easier to talk about the bigger ones because they are rather than picking specific smaller mines, it's the bigger mines that have the ability to meet the needs of a greater number of utilities and a greater number of reactors, and obviously have the biggest impact on the market. For a start, there's just very few large uranium projects out there. That's just a reality of underinvestment in the sector over the last 10 years. So if you were to look at uranium projects that can deliver more than 2 million pounds per annum, when I count them up, we've got 11 in the sector. The largest being Arrow, that NextGen has, and the second largest being Etango that's Bannerman's project with an annualised average production of 7.2 million pounds per annum. Now, when I run through that list, there's only 3 of those 11 projects that have got a definitive feasibility study, which is Etango, Mulga Rock, and Peninsula's Lance, which is has been in production previously. So if you cross Lance off, and they've had some fabulous progress recently, full kudos to them. But if you cross them off as not being a development project per se, it's a very, very tight and small subset at any great size. And despite being such a large project, Etango can go into full ramp up within 3 years of being financed. So it is a relatively swift project that could come on. We've got our environmental and social permitting. It's in Namibia with all the infrastructure in place, et cetera, et cetera. So in terms of the large projects, and we should reassure your listeners that this wasn't a leading question from you, but in terms of the large projects, I'd have to say it's Etango. unless this sector takes a lot longer and a number of these other larger projects can play catch up in terms of some of the very uncertain things like environmental approvals, national scale infrastructure, et cetera, et cetera.
I have pretty similar views. I think that if uranium was $45 tomorrow when we made coffee, given the date that we have in line now, I would say that the earliest that would be back online, MacArthur River, would be 2 years. But uranium's not at $45 a pound. So your scenario of December 45 or January 45, contracting, rehiring, finding the talent, restarting, ramping back up, that's 2023, or maybe sometime in 2022 if you're lucky. So I think that's right online. And I think on the other side, on the new notable mines, I think that it's an interesting point you made there with obviously the quickest, you said 3 years. We know that next gen, highly unlikely that would happen in red tape Canada. So I think that's an interesting point that you mentioned there. I'm going to leave it there on that. Let's move on to something else. Is there any key people or companies that you'd like to mention that are notable for people, the audience, to maybe look into? Is there any key sector veterans or people you like, or maybe a company that's very interesting to you that you'd like to mention?
I think the most interesting development in the sector has been the advent of the new financial players. So this is both your yellow cakes who are raising money to buy physical uranium, but also your new investor vehicles that are focused on uranium equities. And there is a huge amount of expertise lying behind those groups. So if you were to just pick some examples, Sachem Cove partners with Mike Alkin, and not only incredibly detailed the work that Mike and Tim have done on the sector, but he's come to the sector from a very different background. And I always find that interesting. I always find it interesting when someone isn't loaded with the cognitive bias that often happens with someone who made a lot of money in the last sector, or is in other ways in love with the industry, etc. So it's always fascinating to listen to Mike's perspective. Apart from just being high quality, you always get something a little bit different as well. Then another one was Oklana Asset Management out of Singapore. They've launched a uranium fund that's focused on equities. Alex Molyneux's great value. He also has a broad sector approach, so he isn't limited in terms of thinking about uranium from a nuclear perspective. He thinks of other industries at the same time. The guys at Segra Capital, Adam and Art, both deep thinkers, do a lot of good work on the sector. And then Dustin Garrow, who works for Yellowcake, Bannerman and Energy Fuels. He's someone who's been around for 40 years. He's worked across the nuclear sector, everything from being a maritime nuclear guy from the Navy days, through trading companies, through investment vehicles like Yellowcake, advising producers. I think it was Dustin who sold the $136 pound back in 2007. So an absolute wealth of information, and I'm very fortunate to have Dustin in my team, and it certainly gives us a thinking edge and an analysis edge that is very supportive for our business, and certainly means that myself and the board has an edge when it comes to strategic decisions. So I think, and then some of the new entrants are interesting as well. So L2 Capital, which is a Brazilian fund that they've got a fund that specialises in uranium. Marcelo Lopez, you've probably seen him on Twitter, again, come into the sector relatively recently with a very open mind. Always a different perspective because he's coming from a South American perspective. He's getting asked questions from Brazilian investors and family offices and so on. So someone that's definitely worth following and listening carefully to. And, all of those people I have quite a lot of interaction with and I respect enormously. So I think that's a good source of information. And because they're equity investors, not company promoters, they do have a more balanced perspective. So when they're looking at a Section 232, it's their job not to drink too much of the producer Kool-Aid, but to look at what AHUG are doing and look at it from the utility perspective and look at it from the bigger perspective and try and form their best balanced view. Now, they're not always going to hand over all of that IP straight out of Twitter or over a podcast, but they all have an interest in guiding the investor market in the right direction, which is certainly what I'm trying to do as well.
Well, Brandon, that was a wealth of information. I think we'll leave it there at part 1. We look forward to having you back for part 2.
Great. Well, I'd enjoy that. Yeah, thanks very much, Andrew.